Well, hey, everybody. Are you looking for a quick way to do a top down analysis of a stock? Well, I got you. In this video, I'm going to show you 3 steps you can use to do a top down analysis on any stock that will get you ready to place trades and to exit those trades for profits. All right, let's get into it. Step 1 of the top down analysis includes charting. I'm going to start on the monthly time frame. We will also do the weekly and the daily. Let's chart for some support and resistance on this time frame. I see one at 195. Oh, we're using Apple. We'll start with Apple, by the way. Support there. I usually mark several zones for support and resistance in order to see them when you go to smaller time frames. You'll also have them there to look at. On the monthly chart, that means every candle here is 1 month worth of data. So when we go to the shorter time frames, we're going to see a little bit different fine-tunedness or granularity of the data. Okay? That's some support and resistance on the monthly chart. Now let's switch over to the weekly chart. Remember that every one of these lines is a zone. It's not a hard line. It is an area in which the price goes and then reverses. Not hard lines, but I'm looking for peaks and valleys. Looking for peaks and valleys on the weekly time frame. Now, each one of these candles represents 1 week worth of data. After that, let's go to the daily chart. Looking for support and resistance on the daily chart. Let's squeeze in the information so we can see if we missed anything. Notice how every time I go to a smaller time frame, you can see that there is a little bit different information that shows itself. Some of it gets like I selected this support and it's a little bit lower, but again, remember we're in a zone, so this is good. One thing you can do to make sure that you've highlighted all of the necessary places is you can change this from candles to a line. Change it to a line. And again, we're looking for peaks and valleys, places that it drops and reverses, like here. I missed this one. And there's one here down at 185 in that general vicinity, which actually covers these 2 areas. I think I've covered the other ones. This is our, I'm going to change it back to candles. This is the support and resistance levels, starting with the monthly, the weekly, and then the daily chart. If you're trading for much shorter periods of times, like if you're day trading it or you're, only going to swing it, well, even if you're going to swing it for 1 day, you should include a daily chart. But if you're going to trade it intraday, you may consider going down to the 4-hour time frame as well. Step 2 of doing a top-down analysis will include trend analysis. You should look for the trends that you see. I'm back on the monthly chart now, and I'm looking to see what kind of trend has Apple been on during this period of time. We go up here to our charting and we select a trend line. You can start from as low as here. Trend lines can be drawn many different forms. You do want to touch at least two candles in the trend line. So we actually could do 1 to 2 here. We could also do a trend line where we start here and we go up higher, touching that one. If we wanted to get even closer, now mind you, we're on the monthly time frame. We could also trend line here and go up with what's a shorter, closer time frame. Okay, I put on 3 trend lines for the monthly. I could look to on what's on the top if we wanted. Resistance trend lines. You see, as we put more trend lines on, this chart can get really crowded. Let's move to the weekly time frame. The chart can get very crowded very fast. So it's important for you to know, what are you charting for? Are you charting for a leap or a long-term trade? Are you charting for just swinging it a couple of days? Are you charting for 4 to 6 weeks? Are you charting for today? If you're only going to trade it for today, you're definitely going to want to go with a shorter time frame, and you're going to want to chart the support, resistance, and the trend of that time frame. I'm on the weekly now. Our trend line still holds. We have this one, this last one that we did still holds. If we wanted to put another one, we could start at this one and go through here. That's another trend line. Again, you could trend line yourself and trend line your chart to being super full. So you want to be careful with, or at least be strategic and intentional about how much charting you want to do and what kind of time frames. Again, keeping in mind what you're doing for your trading, what kind of trade are you doing. And then lastly, let's do the daily candle, daily trend lines. Now, looks like here from around the 180 time frame, this is a support area. This trend line that was created on the weekly chart doesn't capture this drop here from that's on the daily chart, but this one here did capture that. So you've got your trends there, but it seems to be, you're looking here for a trend. You're also looking to see that over the last course of time, if you do a little, I'm going to use my paintbrush. If you look from here all the way back and around, you can see that Apple has kind of been within a consolidation zone, or within a zone. It's kind of bouncing up and down in this same area. This is also a part of what you'll use for trending to see how much has it moved. We're back to November and we're now in February. It's been staying in this zone for the past couple of months. You want to keep that in mind. Well, hey, I want to thank you for hanging out with us. Thank you for watching the video. Please sure to like and subscribe. Subscribe to the channel. Click the notification bell so you can make sure you get notified every time I post any new content. And we'd love to see you coming over and hanging out with us. The third thing you want to do when you're doing a top-down analysis on a stock is to look at the indicators. I would suggest that you don't overload yourself with indicators, but pick 2 or 3 that are going to provide data for you to help you make a trading decision. The 3 I'm using here is moving averages, the Bollinger Band, MACD, and RSI, which I guess that's 4, not 3. These are the 4 we're going to look at as we do our top-down analysis. I'm looking on the monthly chart again. The Bollinger Bands are here, this little shadowy area on the chart. Bollinger Bands are set to % of the price action. So they can be used to help you to see where price won't go. As a seller, you want to be out of the money. As a buyer, you want to have an identification of whether trades are going to turn around and what are they going to do. So from what I can see with the Bollinger Band, we see how we've gone up. We hit the top of the Bollinger Band. We've come down and hit the bottom of the Bollinger Band, and we've gone back up. We, being Apple, has gone back up, and then now it's come down to the middle, which is this orange line is the 20-period moving average in the middle of the Bollinger Band, and it has bounced off of that and gone back up. Gives you an indication that there may be some upward trend happening there. Looking at the MACD, though, the MACD shows that where the green was strong back on July 3rd, back in the July 3rd, August area, the green was very strong. It is now waning off. The upwards moving strength is waning. It's coming closer to the 0 line and may or may not be flipping over to red. But just know that the upward moving strength has fallen off on the monthly chart. On the RSI, we see that it is not overbought. It's just really languishing, hanging out in the middle, which it has been for a while. It's just been holding steady in here. We did look here. I didn't mention the moving average, but the 9-period, which is this green one, the 9-period moving average has crossed over the 20 a couple of times. The 9-period is going to run much closer to price action, but this crossover, which is a whole strategy for moving averages, this crossover could, and in this case did, indicate an upwards movement. In this back crossover here, they showed us a little bit of a drop, but then it leveled off and rose back up again. But the crossover strategies for moving averages can also be useful. Let's go to the daily. Sorry, not yet. We got to go to the weekly chart first. Weekly chart, still looking at the Bollinger Band, the MACD, the RSI, moving averages. Within the Bollinger Band, the price action is kind of hovering along the middle, the neutral place, which is what it's called on the Bollinger Bands, and it's trying to use that as support to bounce off some more. You see we have an upwards moving trend line that we put on already. As far as the MACD goes, it has turned red on the weekly. Remember when we looked on the monthly, it hadn't turned red yet. It was just a very weak green. But on the weekly chart, it shows that it has turned red. So maybe some strength now going in the downwards direction. The RSI is still just holding on. Looking at the 9-period moving average, though, it is now curling back down, potentially going more in or going in for a crossover. So we're on the weekly chart looking that the 9-period moving average may be setting itself up for a crossover. So let's move to the daily chart and see what's happening on a day-to-day level. Looking at the MACD, it's closed in, gotten a little narrow because there's not a whole lot of volatility happening. The price is still hovering around the 20-period moving average. On the daily chart, on the daily chart, the moving average has crossed over, which could be an indication that there is now downwards movement. When we look at the MACD, it is flat. The RSI is hanging out in the middle as well. This is where we utilize all 3 time frames. We use the monthly, the weekly, and the daily to help us to determine what kind of trade we want to take, whether that is a trade that we're bullish on or a trade where we're bearish. But your time frame, I've said this already, the time frame you're going to trade is going to make a difference. If you're trading long term, you want to look at the monthly and the weekly. If you're trading for a few days, you want to look at the daily and perhaps the 4-hour time frame. But from what we see here, there is the price on the daily chart. Apple has come into some resistance in the 190 area, and then it pulled back at that point. It is still hovering around the neutral place on the 20-period moving average, which could indicate a little more movement upwards or downwards. At this point, looking at the candlestick, this last daily candlestick is a doji candle. Doji candles indicate indecision, means it could go either way. There's a wrestling match per se happening between the buyers and the sellers. If you're trading on a daily, this, in my opinion, would mean you'd need to give it a thought or give it maybe another day to see what happens. But if we go to the weekly chart, we can say for the last week, we also did still have some indecision. The wicks going up and down are pretty big. So from the weekly part, from the weekly standpoint, this is also a bit of indecision. This candle is in the middle or hidden inside of the previous candle, which means it could really go either way. I'm going to go look to the monthly chart and see if we see a direction potentially on the monthly chart. And if we were going with here, this could be seen by some as an engulfing candle, which could say that we're engulfing and maybe going more upwards. It is at support. It came down to the support of 184. It bounced off of that and has gone up for this particular month. This may be an indication that more upwards movement is likely. Okay, so I've shared with you 3 steps to doing a quick top-down analysis on any stock. The first way was to do the charting on the monthly, the weekly, and the daily time frames. The second step was to do trend analysis on all 3 of those time frames again. And the third step was to look at the indicators that you've chosen to use to see if there's an opportunity or confirmation of thoughts that you have from the other 2, from the trend analysis and from the support and resistance on the charting. Okay, be sure to follow us here. Talk later. Bye.